Good afternoon, everyone. Thanks for joining us today. Today, we are here to talk about opportunity, and specifically in this session, I'm going to talk about European equities. The theme for this session is the European age, value, growth, and innovation. So what it simply means is that Europe is transforming. After the past several years of adjustment, they suffered from inflation shocks, tight monetary policies. Things are changing, and we see the investment cycle are picking up. So if the last few years we have seen domination by the US equities, I think the next chapter from here would be investors looking out from US, ex-US market like Europe, Asia Pac, as well as emerging market. So right now, let's delve deeper into the macro recovery that we're seeing right now in the European continent. So as I mentioned earlier, in the past few years, Europe faced challenges from the Ukraine-Russia conflict, the resulting inflation shocks, as well as a tight monetary policy. So that has kept the GDP growth weak in the past few years. But as you've seen in the chart on your left, we have seen the growth coming back in the last 2 years. The macro environment is recovering. Right now, we see the inflation has moderated. And in fact, economic activities, as represented by the composite PMI indicator here on your right-hand side, things has picked up as well over the past year, especially on the service side. So why does this matter to equities? Improvement in macro environment, especially capital formation. That means the real economy is deploying money into investing in infrastructure, digitalization, as well as climate. So you talk about infrastructure investments. Europe, especially in Germany, is embarking on a fiscal stimulus and deregulation. You can see from the chart here on the left, Germany is increasing their spending in the infrastructure, the blue bars, as well in digitalization, as well and climate over the next few years. And this is expected to drive the investment environment and economic activity from 2026 onwards. When you talk about Germany, some of the usual things that comes into mind is engineering precision, engineering excellence. But what's shown on the picture here is a stark reminder of the aging infrastructure in Europe. This is actually a picture of the Kerala Bridge collapse that took place quite recently, back in September 2024 in Dresden, Germany. So the German government is actually earmarking 500 billion euros over the next 12 years for infrastructure renewal. And to note, 40% of the European transport infrastructure is actually more than 40 years old. So it's really a due for more investment to spend on renewing the infrastructure in the continent. So from infrastructure, that was one of the main pillars for the economic growth going forward. Another equally powerful pillar to support the economy would be the digitalization measures. The EU Digital Decade Program is going to spend about 200 billion euros to transform the public services, digitalize businesses across SMEs, build out AI infrastructure and cloud services in the continent. So what does this mean? Structural demand for software and automation, build outs of data center infrastructure, and also secure networks. And also there'll be increasing demand for the digital skills as well. So we talk about macro improvement, investment in infrastructure, and also for the digitalization. The other investment themes that to look out for is European continent itself actually hosts leading companies in the fields of digitalization, automation, as well as renewable energy. In fact, there are quite a number of global leading companies in sectors like banking, healthcare, and industrial. Valuation-wise also, despite European equity doing well in 2025, we think the valuation is still very compelling. The valuation discount to the US equities should drive continued performance of European equities going to 2026. And lastly, investing in Europe provides diversification in terms of your currency exposure. European companies, you can get exposure to Euro, Great Britain pound, as well as a Swiss franc. And all this helps to diversify your portfolio exposure. So how do you capture all these opportunity in Europe? We think an active management strategy matters here because the policy and the transition path will be uneven across the country within Europe. So selective investment matters, and hence active management will help us to identify the winners. So let's anchor the investment themes that we had talked about earlier by showing you some of the sample company cases that exemplifies European age. So BNP Paribas is one of the largest bank in Europe in terms of asset size, and also they are a global players across retail, commercial, as well as institutional banking side. And the bank is actually targeting a very resilient growth. In terms of the return on equity, they're targeting to grow to 22% by 2030. And this is mainly driven by prudent cost and risk management. The company also aims to more than double its dividend per share and raise its payout ratio to 75% by 2030. So what does this mean? A company with strong capital, diversified revenue stream across the business segments, as well as prudent risk management. So this is an example of investment that helps to capture the growth opportunity that we are seeing in Europe. From financials, we move to healthcare. Novartis is also a titan in terms of the pharmaceutical industry. They're one of the top 3 pharmaceutical names in Europe. And they have innovation leadership in the fields of oncology, immunology, as well as cardiovascular therapies. As you can see from the table here, in terms of their strong quality pipeline, they already have 14 in-market blockbusters in their portfolio right now. And going forward, they still have 6+ ongoing launches, 15 submission enabling readout in the next 2 years, and over the longer term, 30+ potential high-value new innovation in the pipeline. In terms of financial performance, companies not doing bad either. You see resilient sales growth over the past few years, despite generally the GDP in the Eurozone was quite volatile. In terms of core margin on the right-hand side, very resilient given the innovation leadership that they're commanding within the pharmaceutical space. Okay, so Novartis would be a defensive exposure for European portfolio that helps to complement your cyclical exposure like industrial. So for industrial, if I move on next, this is a sector that is going to drive the spending in AI data center infrastructure build out, your hard infrastructure like building bridges, better roads. And all these spending are going to keep going higher and higher in Europe over the next few years, which is something we haven't seen in the past few years. On technology side, the build-out of AI data center services. US hyperscalers is actually projecting to grow about 40 to 60% year-on-year basis in 2026. So these players, they are less price sensitive. What matters to them is energy reliability and also timing of the infrastructure ability to them. So the beneficiary on this industrial investment, some of the companies includes Siemens Energy as well as Schneider Electric. Let's talk about a bit more on Siemens Energy. So Siemens Energy is a global energy provider. They have a comprehensive suite of energy technology services that encompass gas turbines, wind power generation, transmission system, as well as renewable energy solutions. So you can see from the recent company guidance from Siemens Energy, for this year alone, they are guiding for 11 to 13% revenue growth and a very decent profit margin of 9 to 11%. But if you look at the purple chart here in terms of the profit margin for the coming years, they expect this to continue improving. For example, in the midterm 2028 target, they expect the profit margin to improve further to 14 and 16%. So as I mentioned earlier, the new orders that they are getting right now from all these hyperscalers, data center build out, margins are getting better because there are just a lot of demand out there. For them themselves, they are seeing a backlog of more than 200 gas turbines. And all these new projects also are giving better margins. So, talk about the few investment catalysts for the European market. How do we capture that? Our solution is the M European Equity Alpha. So these are our internally managed funds that invest in European equity. The fund aims to deliver capital growth suitable for investors with a long-term horizon. And what is the proposition for European equities? Just to recap, valuations are right now very attractive. It's still trading at a discount to US equity, which has done very well. And coupled with the underlying macro recovery, CAPEX investments that's taking place in Europe, we think it's an opportune time for investors to gain exposure in European equities. And our fund employs an active investment approach that's designed to allocate efficiently across sectors and countries, complemented by commission stock calls with the aim to outperform the benchmark. Like I mentioned earlier also, Europe is a host to a slew of global leading companies that earn its revenue not just within Europe but also outside Europe. So European equities provide a diversification for investors outside of US in these global leaders as well as currency exposure. Now let us bring you through the how has the fund performed and what is the fund positioning today. For the M European Equity Alpha Fund, it was ranked first in 2025 last year. As of 30th November numbers, the fund has returned 12.5% in the first 11 months and also consistently ranked first and second over the 1, 3, and 5 years. In terms of positioning, right now the portfolio, the top holding includes the broad market Europe ETFs, which provide a diversified and efficient allocation across the Europe continent to capture the macro recovery that I've talked about earlier. Complementing commission tilts like country allocation, where our focus right now is on Germany, anchoring the portfolio because we see that as being the Europe's growth engine. We also maintain cash and money market sleeve for flexibility. Okay, I think for fund details, you can reach out to our booth or website, but I'd just like to bring you through. Like I mentioned, the fund is managed internally by the M Funds management. And we are a multiple award-winning fund house, including one by IFAS for this particular fund. But before I end this presentation, I'd just like to recap. Europe is undergoing a transformation right now, from your macro recovery, spending into infrastructure, digitalization. Valuation-wise, it's also very compelling, and it's still trading at a discount to US, which has done very well. So we expect to see continued flows and the improving environment in Europe to continue into 2026. And what a better way to capture this opportunity via an active strategy as exemplified by our M European Equity Fund. Thank you. I'll take your questions in a panel session later.